Welcome back. You're watching Biz Check, where we discuss critical issues around the economy, business, and of course, social development that impact your life on a daily basis. And turn now to focus on the minimum wage debates. And on the 1st of May, President Uhuru Kenyatta increased the minimum wage by 12%. Of course, there was uproar from employers, saying that this was uncalled for at a time when the economy is struggling and companies are struggling, of course, to employ and to remain afloat. To help us put this conversation into the right perspective and, of course, look at the pros and cons of these, we're joined by CPA Sammy Aloyo. He's a director at Accmak Global Consultant, which is a tax as well as business advisory consultancy here in Nairobi. And he knows a thing or two about taxation and, of course, how the minimum wage is likely to impact companies going forward. And, of course, how it's likely to impact Kenya's competitiveness on the global map. Thank you very much indeed,
Thank
Aloyo,
you,
for your time. So first of all, I want to hear from you. I mean, when you heard the news from President Uhuru Kenyatta, at the Nyayo National Stadium on the minimum wage, what was your reaction as a financial consultant?
As a financial consultant, we're looking both ways, both from the employer side and the employee side. It was overwhelming and it was high. It was a good move by the president, because when you look at the inflation right now, the consumer purchasing parity has actually gone high. Goods are higher right now. The taxes are, as much as they've lowered the tax by putting a minimum bill, I think it was a good move by the president actually to cushion them employees and give them a token. However, for the employers, it's going to be something that is going to be looked at, because people already have done budgets. This is media. People have done budgets. We have budgeted profits. So that aspect of budgeted profits is going to be affected. So employers are going to sit down and try to come up with measures how to cushion and how to act and counteract whatever the president has done. So both for the consumer is fine, for the employee is actually an added move, but from the employer side is going to be a pain.
The 1st of May, I mean, this is coming how many days? Almost a month after the national budget was presented in the month of May. That was on the 9th of April. And it is coming how many? About almost 1.5 months before the end of the current financial year. How is it going to complicate the operations of companies going forward?
Most companies are going to do restructure, because you see, most of the companies are going to be affected are those in the manufacturing sector, because those are the people who have huge number of employees in the minimum scale. Most corporates have employees in the upper scales, which means they'll not be affected as much as people in the manufacturing sector. So you're going to see a lot of restructure. Most companies might want to lay off. Those ones who had planned to actually employ more, they're going to retract on that kind of aspect, so they see how to maintain the profits that they actually budgeted for in the beginning of the year. Yes.
So, and when you talk about, restructuring and, when you hear such words, right sizing, downsizing, I mean, one thing comes into mind is the laying off of people, companies shedding off workers. And this is definitely, the worst time to do this because of the prevailing micro and macroeconomic environments in this country. Is there anything that can be done, to ameliorate, the situation as we stand?
Things can be done, but depends from company to company. It depends on the company strategies that actually have been employed by the owners of the company. Other companies will look at it and actually restrain. There are those who are actually paying overtime. Most companies will now come up and say, we can no longer pay overtime. There are those companies now who would say, we are going to increase salary at a scale maybe next year. That means that plan to increase salaries are going to be retracted back. So it depends with the company and the organization and their structure of implementation. So it varies across board the sector. Yes.
So from that pronouncement by President Uhuru Kenyatta, from where you see it, do you believe it was done in consultation with industry stakeholders?
I believe that's a political move. That's a political move. It's barely a political move. We are actually moving into an era of election. So I believe that is a political move, as much as it was well intended for the consumer. Because you see, if there were a consultation between the employers and the government, then you see that the employers actually complained after that kind of narration, because it means going to actually increase the wage bill. That means their profits are going to go, because most corporations are looking at profits. And when you look at the current economical structure, companies are going at a loss, because actually the war in Ukraine, things have gone up, manufacturing costs have gone up, now the wage bill has gone up. So most companies actually, and the employers actually struggling with the fact that they have now to dip more in the pocket to pay more to their employees. Yes.
You know, when the president made, and I'm going to read what he actually said, when he announced that minimum increment, he said there is a compelling case to review the minimum wage so as to cushion our workers against further erosion of their purchasing power.
Yes.
Definitely, I mean, that is a compelling case,
yes.
one can argue.
Yes.
But do you think it was done in the right context?
In terms of context, like I told you, this is a political move. As much as it's actually helping the employees, it's a political move. In the context of which it was applied, because you see, it's going to have impact. Employees are going to have extra income. With the minimum wage was 13,500. Now it moves to 15,000 shillings. That means an average of around 2,000 shillings on a larger scale. So as much as it was well intended for the employee, how that 2,000 is going to impact a life now depends with the individual in this kind of manner. How it's going to impact the employers is going to they're going to have to dip more into their pockets so they can survive this economical turbulence. And the truth is this, that as far as we are going, things are going to get tougher. Prices are going to increase. The war in Ukraine is still ongoing. We're actually importers of these basic commodities that we provide. That means the 2,000 that has been increased to 1,500, as much as it's going to be an ease on the employee, it's not going to be so much that actually can be...
The impact will not be significant.
The impact cannot be significant in
because
this kind of scenario.
Because currently, you know, the minimum wage in Kenya is 13,500.
Yes.
So with a 12% increase, that is coming to
15,120. Yes.
You know, to cushion workers, you know, in a proper way, and to cushion the most vulnerable.
Yes.
And the most vulnerable in this country are people who are in that category of wage bill going lower, and of course, you know, going up a little bit. How would it have been done differently, you know, to impact, to have a major impact on the social well-being of workers, and of course to protect the interest of employers?
One way the government should have looked at it is actually taxes. Is reduce taxes or exempt taxes in the basic commodities, totally basic commodities. We are seeing the price of oil is going up because there are sanctions. Even the largest exporter of oil, Indonesia, actually they're saying they're closing down exports.
That is palm oil.
Yeah, that's palm oil. So that means the prices of oil is going up. So the government, how it look at it is just look at it in terms of taxes. That will have helped everybody across the board, because 1,500 shillings, an extra income, as much as is good, it might not help you as much, because if a liter of cooking oil right now goes to around 300 shillings, then how much more can you purchase? So the government should have looked at it in terms of taxes reduction, or abolishing the taxes on basic commodities. Corruption is here. You cannot say they're going to abolish corruption right now. It's a long-term process, but the immediate process is abolishment of taxes in the basic commodities. And actually manufacturers could be given a relief of a kind, because it is from the manufacturing that we are getting prices on these commodities. So if the manufacturers could be given a relief, that the products they're manufacturing have a relief tagged on it in terms of taxes, then that means the basic commodities that we're buying locally will have a price reduction. So it will be easy for the common mananchi to buy basic needs, because this is what we need for the basic mananchi. Those ones who are earning between 10,000 and maybe 25,000.
But by reducing you know, the basic commodities, I mean, and this was done in 2017 until it was reviewed in 2020. And the Kenya Revenue Authority was decrying that it was losing billions of shillings, in unpaid taxes because of these moves.
Yes.
And this was having a direct impact on Kenya's development agenda, as well as taxation raising measures.
Yes.
So then how then would the government have done that and at the same time not had taxation measures that have been put in place?
You see, when you look at countries like the US, they're taxing the rich more, they're taxing the poor less. So that kind of tax regime, if it's applied retrospectively in this kind of market, it could yield results. Because you see what the government is doing, the projects the government is engaging in, they are long-term projects. The roads they're constructing now, the buildings, the infrastructure, is not an immediate return. It has a long-term effect return. So by the time this return is going to have effect on this economy, we have 5 years lapse years, or maybe between 3 and 5 years lapse. So between this period, the government, as much as the taxes will have impacted higher on the Kenya Revenue Authority, that they will be unable to collect, because you see, in the Kenya Revenue Authority, they collect what the government plans to spend. So that means one structure the government would have done is try and audit the expenditure of its exchequer, so that you limit whatever budgets are given by these departments, so that you can have something left out. And this sum that is left out, now you cushion and attract it on the tax base. That means the tax base will reduce. Because the problem with KRA is they're collecting money for people who are budgeting. They're not budgeting. Their work is to collect. So there are other people who are budgeting. So if you could cross-merge this kind of sectors, whereby the Auditor General has a mandate, given a mandate that on these budgets, they relook these budgets and cut them on cost measures, so that the impact on what is being collected can affect the economy.
But that role is given to the National Assembly.
Yes.
Through the Budget Committee.
Budget Committee.
Whereby they look into those issues. And, constitutionally, I mean, the National Assembly is the representation of people's will, politically.
Yes.
And so, in your own opinion, you feel that it is high time that we onboarded the National
Assembly,
the Auditor's Office, to also be going through these budgets and, of course, giving their opinion.
Yes, I believe that would be a very brilliant direction, because you see, the Auditor General looks at a broader perspective. The Parliament is a political body. As much as you want to look at it as a public interest body, they have political interests. As long as their salaries
are... It's an institution composed of politicians.
Yeah, politicians. They have political interests. So as long as their salaries are untouched, you remember when they tried to touch the political salaries, all of them came up in arms. So as long as their interests are taken care of, they don't mind about all other Kenyans. So I believe it will be a good move to involve the Auditor General in this kind of budgeted processes, so that by the time the budget are actually being approved to be forwarded to the Treasury, so that KRA could actually collect this money. The Auditor General has gone through it, has approved it, and actually has said this is right. Because you see, some of the budgets, I've worked in the government institution before, some of the budgets that are coming up on board have a lot of expenses that actually, when you look at it, they're just obvious and absurd. So when the Auditor General, you have an extra eye to look at this kind of budgets, then we are sure that some of these things that actually are inflating the budget will actually go down. Yes.
And also bearing in mind that, you have the Parliamentary Budget Office, which is supposed to look keenly, into the issues of budgeting, and of course, appraise Parliament, on the same. Don't you think then we'll also be having, a lot of repetition by various institutions? Because see,
why I propose this kind of structure, I've actually proposed it. I have a rule I actually say. The budget is a political document. The people who are constructing a budget actually look at many other things, broader perspective, beyond what me and you would look at it. They look at what the president wants. They look at what the president wants to impact on the people. We have government projects that actually look at the social welfare of Kenyans, and they look at the political tension. So the budget processes in government, actually they overlook many other aspects. So they have to come up with a balanced document. So this balanced document, that's what I say, I would propose the balanced document could actually go further to an extra dimension, whereby the Auditor General could look at this kind of document from various institutions of government and actually give a clean bill of health before they actually proceed. Yes.
You see, this was the first time in 3 years that the president has announced a new minimum wage. And the last time it was done was in 2018, and it was increased by 5%. At that time, the inflation rate was about 5.53%.
Yes.
Now you're looking at 6.4?
6.5 actually.
6.5%. Yes. And the projections are that, by the end of this month, the figures are likely to change.
Yes.
So do you think, don't you think then, the low cadre worker, had been left to suffer for too long?
Like I told you, this is a political move as much as it's a financial move.
Why do you want to look at it, from a political lens? Because
government is a political institution, or however much you want to look at it. As much as they have financial components in it, it's a political institution. They have to go with the masses. From between 2017 and now, between that period and now, like you see, inflation has actually gone above like 1%, one more extra percent. That means there's a high, whatever you were purchasing before, prices have gone up of commodities. The cost of living actually has gone up. So it was a bright moment for the president to give this increase. However, I look at it as a political direction. Because the president now is leaving office. He wants to appease whoever he has been serving because he has been critiqued before. So he has to see, let's give workers this kind of token to cushion them. When I go look, 12% is not much. Like I tell you, it's 1,500, Bob. 1,500 shillings for an ordinary Kenyan. It will just serve you a week. It is not, it's nothing, but it's not that much. They will have looked at it differently. That's why I'm looking at it as a political move. So that the president, actually, as I leave office, I leave with a good thing.
In 2017, we saw a similar move where, the minimum wage was increased by a whopping 18%, and the Federation of Employers of Kenya, were up in arms again, and were saying that this is going to push so many employees out of business. They're going to fire people. I'm yet to get any statistics as to what happened back then. But do you see the situation getting out of hand, whereby we're likely to see mass layoffs in corporate Kenya?
Like I told you, different corporates have different strategies. What they look at is different. There are those who have a capital resource is key. There are those who management resources is key. So for those ones who have capital resources key, they will try and see how they're going to circumvent the process. But that means that whatever benefits they actually had placed to give out, that means they will not be able to give out. If they had actually planned to give out dividends, that means dividends to shareholders are going to go down. So I believe in the coming years, in the coming few months, those companies that actually will feel unable to bear this burden, you'll start seeing layoffs of stricter measures to the employees.
Yes. Allow me also to read, part of the statement that, President Uhuru Kenyatta, referred to when he increased the minimum wage bill by 12%. And this is what he said: "In full appreciation of the critical contribution of workers to the economy, and following the recommendation of various stakeholders," and I want you to underline stakeholders, "we find that there is a compelling case to review the minimum wage so as to cushion our workers against further erosion." So when the president talks about various stakeholders, I know you do not hold brief for the president. Would you see a situation whereby, employers were never consulted when this decision was made?
I think employers are consulted, but they rejected it. Before this 1st of May, you saw employers saying, we believe they're not going to increase the minimum wage. Actually, that's what they said before the 1st. But when the president came in on 1st, he said, we are increasing by 12%. And immediately after that announcement, you saw the chair of the FKE saying, this was not part of our plan. This is a raw deal for us. We are going to consult more and see how we're going to merge this process. So I believe, as much as stakeholders, as much as consultation goes on, you might be consulted, but whatever you promise or whatever you're given might actually be overridden by other stakeholders. But
also, let's face it, as a country, for anybody to be earning 13,500, 16,000 in Nairobi, I mean, is that even sustainable?
It is not sustainable, but look at the company. Because see, it's the company that actually employs that decides we can only give this much to this kind of person. So, and you see, these companies actually, when they're doing their budgeting, they look at a broader perspective. And tax is key. When you look at the East African market, we actually, we are among the countries where the tax is actually high. So when you look at our tax regime, that is the only place where if it is looked at carefully, we could reduce all these other costs.
But value-added tax is, is uniform across the board.
It's uniform. It is uniform across the board. But look at our 30% on the corporate taxation. The VAT is transactional. Corporate tax is at the end of the day. So VAT affects you and me because the manufacturer passes that kind of burden to you and me. So that affects me and you directly. The corporate tax affects the companies independently. So when they put all these things together, corporate says we can only pay a bill up to this much. So as much as we might want to say it is not enough, the payment or the structure of payment comes to these corporates which are operating in this kind of market. So they are the ones who determine, I have to pay this on 13,000. Like you can see now they're saying it has gone from 13 to 15. They are crying out loud. If they were given a chance to pay employees lesser, they would actually done that. The truth is, it is not sustainable. Yes.
You know, when the Secretary General of the Central Organization of Trade Workers Union, that is COTU, Francis Atwoli, rose to speak. I mean, he said that they actually wanted a 40% increase in wages, but after consultation with the Ministry of Labour and Federation of Kenya Employers, they agreed at 12%. So from your understanding, and then the following day, I mean, or actually the same day, a statement is issued by the Federation of Kenya Employers saying that they do not support that move. And so everybody was left wondering, now who is telling the truth and who is becoming economical with the truth?
Yeah, I believe consultations were done, but the final agreement, again, was not agreed upon. I believe that is what transpired. Yes.
But when you look at our economic fundamentals as a country, as we stand now, coming from a very painful macroeconomic environment under the coronavirus pandemic, now we are battling with the era of hyperinflation because of rising commodity prices, and you're talking about fertilizer, you're talking about oil, which is a critical component, in Kenya's manufacturing industry. Do they support a 12% pay increment?
The manufacturers?
No, the fundamentals.
The fundamentals of economics. They support it. They support it because you see what the president is trying to do right now is actually increase the purchasing power parity of an individual. That affects the GDP and the larger scale of events. Actually, look at the GDP of the country. It's actually the purchasing power parity is actually one of the components that actually is used to calculate the GDP at the end of the period. But when you look at the economic stabilization of our country at this moment, because you see we are dependent on the manufacturers. Most countries, they have economic muscle because they're actually dependent on exports. As we import more than we actually export, that is the burden of which we have in this economy. So in terms of the economical structure of this country, yes, it is workable, but the dependence is on the private sector. Yes, so you see the private sector now determines whatever you're giving us is not achievable in our circumstances as of now. Yes.
I mean, allow me to read the statement that was issued by the FKE Executive Director, Jacqueline Mogo, and she said that it was on Sunday, that labor is a fixed cost, and so this wage rise is a monthly hit on the payroll, but we will do what we can to see what adjustment to make to comply with the head of a state directive. From where you sit or from where you stand, I mean, how do you interpret, Her statement.
Her statement.
Yeah.
But I believe, you see, the president has already issued the directive.
Because this is a non-committal statement.
Yes, but it has to be followed, right, from the president. So whatever they are saying is we have to go back to our structures and restructure, as I told you before. Most companies are going to restructure to cushion the increase in the wage bill. So that means they're going to have different companies will apply different structures depending on their organization and their market. And I tell you the truth is, depending on the kind of organization, we're going to see either layoffs or retracted benefits to the employees. Yes.
And of course, well, the other impact is the fact that, you know, this is likely to create backlog in terms of people looking for employment, because now you have a situation whereby companies are paying more to their workers, and so they're not going to hire more people because you know, they're cash strapped.
Yes.
But the question is this: then how do we also need to match productivity with the minimum wage?
The minimum wage. So when you look at productivity and the minimum wage, productivity is viewed differently from different organizations. Like I told you, there are those companies which believe human capital is core to them. That kind of organization, whatever illustrations, whatever benefits, or whatever pains that come with this directive, they will hold it still. But those companies which feel that IT is more critical than the human wage, actually, they're going to reduce the wage, the employees. The benefits that employees get in these manufacturing sectors, some are given lunch, some are given tea breaks. That means if companies look at it from a different perspective, they're going to cut these benefits from these employees. Yes.
And now going forward, because you know, we're talking about inflation going up. So will that minimum wage increment have any impact going forward?
It will have very minimal impact. It's going to have very minimal impact. Like you see, every day, the war in Ukraine is still ongoing. That means fuel prices are still going to go up. We still have a struggling shilling against the dollar. That means the economy and whatever expenses we have in manufacturing are going to go up. Means that they'll pass it to the consumer. Oil, everything is going up. So whatever difference we have between the 13,000 and 15, that is 1,500, as much as it's going to help, it's not going to be so much. But I think the president should be applauded for this kind of move. However, it's not going to be so much to the employee, because as much as you have increased 1,500, the prices of commodities have actually increased double whatever you have increased the employees. Yes.
You know, as part of the remedial measures that you are trying to pass across is, you know, removing or reducing taxes on basic commodities.
Yes.
But that may have a feel-good effect, you know, in the short term to medium term. But in the long term, can that be sustained going forward?
It actually can be sustained. Like when you look at the Kenyan economy and when you look at our budgets, we have corrupted budgets. If corruption can be removed from these budgets, I tell you the truth, that even if you reduce the taxes on the commodities, it's going to be sustained. Because whoever is going to collect this money, which is the Kenya Revenue Authority, are going to collect money that's going into projects and actual projects. So if corruption is eliminated, then whatever margin you have that actually will be created by reduction of taxes on basic commodities can actually be managed. Yes.
And I have had this conversation around, you know, the corrupted budget.
Yes.
But how do you pinpoint, or, you know, as a country, I mean, how do we get to a point whereby we sit down, we look at the budget and we say, there is an element of corruption in our budget and we need to streamline this?
Yeah. Like I proposed before, I can tell you, from where I sit, I believe this budget needs to be subjected to another extra authority like the Auditors General. Because when you look at the prices some of these budgets are coming up with, they're extraordinary budgets. When you look at what the Auditor General actually just flagged the other day, that a commodity was to be given at price X, but it was budgeted 2 or 3 times what it was supposed to be actually bought for or sold for. So you see, once we have an extra independent body that looks at these budgets before they're actually taken to Parliament for approval, or if this Auditor General is given an oversight or a mandate to advise the budget committee on the budget that actually being created, I think that would help us eliminate the process of corruption. Corruption cannot be eliminated completely, but actually it can be reduced.
Yes. I know You know, we keep on talking about inflation in this country, but you know, there are a lot of people who are yet to understand the whole concept of inflation and how it impacts on their, or how it erodes, you know, their purchasing power. Yeah. Probably, maybe you could take a minute or two, you know, to explain to people what is contained in the inflation basket and how it affects their purchasing power.
One thing about inflation, I think when people talk about inflation, actually, people think about different things. The basic inflation that affects everyone else is the purchasing power and the prices of commodity and prices of transaction. For example, oil, just the other day it was 110, actually 104, now it is 140. That means there has been an increase in the manufacturing. The manufacturers have to actually pay 40 extra shillings for a liter of petrol so that they can run their companies. These companies, they produce goods. Whatever the goods they produce, at the tail end, they have to merge these costs so they can recover from the goods they have produced. That means the prices of goods actually will go up. That means if you're buying bread, just the other day you're buying bread at 30 shillings, right now you're buying it at 55. Or just 2 months ago you're buying it at 50, now you're buying it at 55. Milk actually has gone up. So that is inflation in itself. So whatever is happening, if the prices of oil is increasing, that means we have inflated prices on the basic commodities that you're purchasing. So if you're purchasing something at 50 shillings, now it is 55. Milk the other day, a liter was just 45 shillings. Now it's 75 shillings. So that is the effects of inflation that actually are impacting from the manufacturer, from the importer, back to the consumer, now who has to pay higher prices to achieve basic commodities or any other commodity. Yes.
And so what you're simply saying is that, you know, and you have used the example of oil, you know, sometimes in January it was 110, now people are paying 144 shillings, you know, for super petrol, and diesel is how much? Is it 120?
127, I think.
Yes, 127, you know, thereabout. And this cost by transporters, by manufacturers, is going to go to, or is going to end to the end consumer in what we call the pass-through effect. But as consumers, I mean, how do you adjust your lifestyle, you know, to deal with this?
I think every consumer, regardless of how much you're earning, you have luxury purchases and you have basic purchases. So regardless the components of what you have, that means you have to reduce your luxury purchases to adapt to your basic purchases. And luxury depends. To you, milk can be a basic commodity. To someone else, milk can be a luxury commodity. So it just depends on how you're going to balance yourself out. So you have to reduce your luxury commodities, and whatever money is remaining, you have to put it on your basic commodities.
Look, you know, the issue of raising the minimum wage by the government, I mean, is a culture that dates back to more than 5 decades since Kenya attained independence. Do you think it adds any value to the workers?
It added value before. You see, before this era, between the 2007 era and now era, it added value before, because before we didn't have huge development projects. We didn't have a high borrowing from outside. When you look at the difference between now and before, right now we have a lot of loans that we need to pay out. So the development that actually we are using, or we used money to borrow, so that, because you see, every borrower, before you borrow the IMF tells you, okay, this is your standard. If you want to borrow more, how are you going to raise the extra money? Then they tell you, okay, fine, you have to raise VAT, or you have to raise commodity taxes. So when you look at the different regimes, it helped before, but right now it's just helping you to balance, because the inflation is going up, prices of commodities are going up, taxes are going up. So whatever you're increasing, as much as it's an increase, it just barely lives at the same level. We have an advantage that the president gave increase the relief on pay as you earn. That was a very brilliant move, because right now, if we had increased 1,500 to someone who was earning 13,000, that means they have actually moved up to the tax bracket. So whatever they will have been taxed is actually more than what you're increasing for them. So I believe before it used to make sense. Right now it's just it's just a balancing act in the economy. Yes.
Is it high time that we leave the markets, to balance themselves, and should we leave then the question of deciding how much do I pay the workers and what should be my minimum wage, to different companies? Because let's face it, I mean, you have big corporations,
yes.
You have middle-sized corporations, of course you have small corporations, and their revenue stream is absolutely different. Their returns are also different. So is it high time that we abolish that issue of declaring minimum wages?
No, I believe declaring minimum wage helps the employee, because as much as we want to sit and say it is a tactical move, that we have different employers who want to actually take advantage of the fact that there is no regulation. Someone will pay you 5,000 shillings and Kenyans are desperate. You will start weighing, do I stay at home and earn nothing, or go to work and earn 5,000 shillings? So I believe the cap that the government is placing and the regulation they're placing on the minimum wage helps and cushions the employees against bad employers.
Are you trying to say that the market cannot be left to regulate itself and the issue of wage?
In the issue of wage, it cannot be able to regulate itself, because what happens, the business owner looks at profits. The business owner does not look at the employee. Actually, business owners don't care about the employees as much. They care about their profits. So it is the employee who comes in, actually, I'm picking you to this position so that I can have a tail end profit. So if you leave them to the owners of companies, that means they're going to use, and actually they're going to take advantage of these employees who are looking for work so they can make profits. So reduced labor means increased profits. So when you leave it for the marketers or the companies to decide by themselves how much they are earning, the employee should earn, that actually is going to form another crisis, because they're going to take advantage of employees. Yes.
And when we talk about the minimum wage, have we ever defined whether it is gross or net?
Now that is a good question, because whatever the president is giving actually is supposed to be on the net, because it's on the net, because right now he has increased relief on pay as you earn. So whatever he's increasing is increased actually on the net. Yes. So most employees on
so this is and when you're talking about the net, this is the money that you are going to take home.
This is the money we're going to
after
take
taxation.
Home. Yes, after taxation. Yes.
So that is what the president increased.
That is what not really. That's not what the president increased. For the minimum wage earners, that's what the president increased, because they're not paying taxes. Pay as you earn is abolished for them. But for that person who's earning 24,000 and increase your 12%, the 12% has increased on your gross. That means if you're not being taxed, it means you're going to go to a regime where you're going to be taxed. So it is on gross, but it will not affect, the gross will only affect those who are paying taxes. If you're moving from one bracket of tax, if you're not being paid tax, you're not paying taxes, it moves you to an extra bracket. That means you're going to be subjected to tax.
But this only affected people who were earning 13,500.
Yes, but
those are exempted from pay as you earn.
Yes, but you see, drivers, their minimum wage is 23,000.
For drivers?
For drivers, 23,000. So if you add 12%, they go up to 25,000. That means, for right now, the tax, the pay as you earn is actually advantageous. They'll pay around 30 shillings or 49 shillings on the pay as you earn. So on this minimum wage, those ones who are earning 13,500. It is actually their net, because they're not paying any taxes. But the increment as is actually on the gross. Yes.
And so to some, this is also likely to adjust some people, into the pay as you earn bracket.
Yes.
So it is a case of giving you something, and of course taking a little bit of it, from one hand. Is that the case?
Not really. In this case, it's not the case, because we have high relief. What cushions this kind of transaction is the high relief we have. So even if you move from one bracket of not paying taxes to the next bracket, that means if you're earning 23,000, you'll earn 25. You'll pay around 30 shillings. So you still have an advantage. Yes. You still have an advantage. Yes.
So, are there people who are going to feel the benefit of these minimum wage rise more than the others?
Yes, definitely. The people earning 13,500 as we speak, they're going to have a benefit because that is going to benefit them. Those ones who are earning above 24,000, the difference is not actually as much as you might want to think because there's a tax element. As much as you earn me 12%, 3% will go back to taxes. Maybe you now have just 9%. So the people who are earning below the 24,000 shillings, they'll actually have a benefit, an overriding benefit. Those ones who are earning above, it will be a marginal benefit.
Do we have any idea how many people or how many workers fall in that category?
According to the statistics, actually that was done, I think, was it Stanbic? They said they said I think 70% of the employees actually in the minimum wage.
70%?
Around 70%. Because these are people employed in the manufacturing industries. These are the people who actually, these are the security guards, some of the security guards, drivers, we have
receptionists.
Yes, receptionists. We have home care workers. These are people who are falling in this kind of category. And actually they are more around 70%. Of the workforce, yes.
They're about 70% of the workforce.
Yes.
So the people who have been spared are the rest, the 30%.
The 30%.
But of course, in terms of taxes,
the 30% are paying taxes.
They carry the burden tax.
They carry the burden taxes.
You know, of Kenya. And so how do we then even out? Because you know, you have a situation whereby 30% of the workforce are paying taxes for the 70% of the workforce, and of course, this is a major burden. So how do you ensure that you even out the equation so that you do not end up, disadvantaging the person who is in the 30%?
Yeah. You see, our tax regime is marginal. It's not subjective as it is that you might want to look at it. The 70% and the 30% share common taxes, like VAT, excess duty. They share the common taxes. Where there's a difference in margin is just the pay as you want, which it is advantageous to have a relief on the 70 and let the 30 pay. It is just a cross balance of events. Yes.
Very good. Anything else that we need to know from you before I let you go?
In terms of taxes, I believe as we increase taxes in this economy, everyone now needs to come through and do their restructure. Because taxes will always be there. The budget has been passed, the taxes that actually have been abolished, those ones we have been exempted, those ones which have been added. It's about planning. For the consumer, it's about planning. You plan well, you execute. If there are things that you were buying before you cannot afford, that means you need to buy less. We have loans in the market. Actually, that now we are like operating a loanable market, which is coming actually in the next 10 years will actually be full loan, like maybe the US. So you look at what you're purchasing, you balance out your effects, you cushion your taxes. For corporates, it's just restructure. Taxes is restructure. You restructure whatever you're having. Look at ways to reduce your costs so that you can still make profit.
Very well. CPA Sam Aloyo, thank you very much indeed for joining us this morning. And of course, now it's almost approaching noon. Of course, for sharing with us, your knowledge on this issue of the minimum wage. And for sure that this debate is likely to go on now that the country is almost getting into the political mood in full swing. Otherwise, thank you very much.
Thank you so much for having me.
Enjoy the rest of the afternoon.
Thank you.
Very good. We've been talking to CPA Sammy Aloyo. He's a director at Accmak Global Consultants, which is a taxation as well as a business advisory company. And of course, the question that we have been battling with is the minimum wage debate. Remember on the 1st of May, that was on Sunday, President Uhuru Kenyatta announced a 12% increment in minimum wage in this country. And of course, there was a reaction from different players, from the Central Organization Trade Union. Oh, they sang hallelujah. From the Federation of Kenya Employers, of course, they were crestfallen on these measures, saying that this was likely to impact the employment and of course the labor market in this country. You have heard it all from Sammy. And of course, my name is O'Brien Kimani. Thank you for your time. You've been with us in the last 2 hours. Remember, Kurunzi is coming up next. Otherwise, enjoy the rest of your afternoon. Bye for now.